All right. So, as we all were saying, all of this Medicare information you need because when you're going from age 64 to age 65 within Chrysler, Chrysler or Stellantis, cuts off your corporate benefits and you need to go on Medicare. But now we're going to talk about some issues or some benefits that are unique to Chrysler beneficiaries and Chrysler employees or retirees. So everything we've been talking about so far, whether on Medicare, whether you're Chrysler or Stellantis retiree or not, it applies to anyone across the country. But these things are unique to Stellantis retirees. So when you were employed, some people use what is called a RHCA, which is a retiree health care account. And this was something that you were able to utilize or to invest in and put after-tax salary dollars in, or there were some matching funds that you were eligible for during your employment that went into this RHCA. So this retiree healthcare account has been accumulating for you for 5, 10, 20, 30, 40 years out there. And it is managed or under the Bank of America or Merrill Lynch. So you have had the ability to invest those dollars similar to your 401k and put them into different mutual funds or stocks or even leave it in cash. Obviously, that is as a defined contribution. This is at your discretion. So this is pretty unique. Chrysler set this up. As it turns out, Ford and GM and not many other companies really have this at all. But it was something that Chrysler and Stellantis set up many years ago for us. So when you were employed, you were able to invest in or put money away aside for this in after-tax dollars. As soon as you retired, you were eligible to start withdrawing money from it. You might not have been aware of that when you retired, but that is now, as a retiree, you were able to utilize those dollars that you put aside to pay for healthcare costs. The things that you can use it for are medical and drug premiums, deductibles, co-pays, co-insurance. You can also use it for other healthcare costs, such as long-term care, other out-of-pocket costs you might have for dental, vision, hearing. And as I said, these are now eligible to be withdrawn at your discretion after the date of your retirement. As I said, the common type of expenses that would go in there are any premiums that you would have for Medicare or Medigap, as John was talking about, or Medicare Advantage, office visits or prescription drugs. Also, they changed the rules, and a lot of these rules are set up by the federal government so that they loosen the restrictions on over-the-counter medications. So those are currently, and have been for a few years now, available to be used against these savings accounts. Medical supplies. The only thing that really is ineligible on the medical side is things that are discretionary, things like cosmetic procedures or general oral health care, hand lotion, toothbrushes, things like that. There's a full list of all these eligible expenses on VIA benefits, and we'll talk about VIA benefits in just a little bit. And there's a website there, and you'll see this website in a few different places. Now, it gets a little tricky because there are two now organizations that manage this. You have VIA Benefits, who's the front end that we would then submit expenses to, but the dollars where those dollars that you put aside over the years are sitting with Bank of America and Merrill Lynch. Now, one of the tricky things is that Via Benefits, who you would submit the expense report to or the request for reimbursement to, cannot see the dollar amounts that you have in your Merrill Lynch account. They have absolutely no visibility. You do, but they don't. So it is behooved on you, the retiree, to make sure that the dollars that you're requesting are actually available in that RHCA account. And they just don't have to be available or there, but you have to actually actively take do something, and you need to move them from any mutual fund that you have invested in or stock or whatever, and even cash, and you have to move it to a very specific account. It's called the Merrill Lynch Institutional Money Market Fund 2. You need to actually move those dollars into that fund and have them available so when you submit the reimbursement request to Via Benefits, that when they bounce the two against each other, that the dollars are actually there to be refunded to you. If you don't have it in the right place at the right time, Via Benefits will bounce the request. So, and all this detail, as I said, is on the website. So as you actually get into this, so you can follow this kind of checklist as you do the claims. But and this process of back and forth between Via Benefits and Merrill Lynch does take some time. So it can take 3 to 4 weeks to have all the gears move in the right direction to actually get your refund or your reimbursement. So don't expect it to happen overnight or in a day or two. It will take a while because there is the check and balance between the two organizations. There is also provision when you retired, but if you're retired at 55 or after, but before 65, you had the ability, not to say that you did it, but you had the ability to use this RHCA account to pay for your Chrysler or Stellantis premiums for your healthcare insurance. And if you did that, and it was an option, you didn't have to, but if you did that, there was another process that you had to go through Merrill Lynch. So you didn't have to move it into this institutional money market fund 2, but then there was an additional step that had to happen where it's then frozen at the beginning of the year so that those insurance premium dollars that you were going to be using out of your RHCA were locked in and they were frozen. So that's another process that you would have to go through just for those if it was insurance premiums. If you're after 65, it's moot because you're no longer covered by Chrysler Insurance. So you can see this process can get a little convoluted and a little difficult to track through. The biggest thing the biggest caveat here is, the two sides really don't talk to one another. Merrill Lynch doesn't know anything about Via Benefits, and Via Benefits really doesn't know anything about Merrill Lynch. So it's up to you as the retiree to talk to each one of these organizations separately and make sure everything works in sync. So that's a benefit that you had as a retiree. And again, RHCAs are optional. You didn't have to use it when you were employed. You can't put dollars in after you're retired. So whatever dollars you had is what you had, and obviously those investments grew hopefully with the stock market or mutual funds that you invested in. But you could not invest any additional dollars in that after you retired. There is, though, one benefit that you do get after you retire and after Chrysler basically says, we are no longer going to cover you with your health insurance, and you go on Medicare, they do provide you one additional benefit. And it's called an HRA, a retiree health care account. Now, you only get this when you turn 65, and it's either you or your spouse. whether you're, if the retiree turned 65 first or the spouse turned 65 first, whichever, you should get a letter from Benefit Connect, which is I think it's from Benefit Connect. I don't think it comes from Via Benefits, but from Benefit Connect, who is like the HR department for retirees, because Stellantis has outsourced the HR processes to Benefit Connect. So you should get a letter from Benefit Connect a few months before you turn 65 or your spouse turns 65 saying you have this new thing called an HRA, a healthcare retirement account. And what it is you are eligible to get around $2,000 or so for the retiree and a surviving spouse if the retiree has passed away, or $1,750 for a spouse if both retiree and spouse are with us in an account. Now, this account is held not by Merrill Lynch, but is held by Via Benefits. And we'll talk about Via Benefits a little bit more in a second. Now, it is up to, as you see on the slide, it's up to 1975 and 1750. That might vary. It might be a little less based upon your age and service subsidy. So when you retired, when you got your pension, and hopefully we all had a pension of some sort. Current employees are not going to have a pension, but we at our age probably do. That might be discounted a bit if you retired a little bit early or you didn't have a number of years in service. So that formula, there could be a percentage, and sometimes it's 100% and sometimes it's less. That percentage will also be in that letter that you get from Benefit Connect. And that percentage will be the same percentage as the percentage that you had on your pension when you retired. So that's the same number that they use that when you retired, and on the pension, they'll use that exact same percentage on this HRA. So you might get 1975 or 1750 or a lesser amount based on that percentage multiplication. This amount of money you get at least, now it is a benefit that is not guaranteed, so it's up to Stellantis to decide every year whether this benefit will continue. It's not like your pension, which was guaranteed when you retired. This is at the largesse of the corporation, but so far they've done this for 20 years, 15 or 20 years or so far, and hopefully it continues. You get that in January of every year. At the beginning of January, approximately. In the first year in which you or your spouse are eligible for it, it is prorated to get, let's say you turn 65 in July, you would get 6 months worth of this amount of money, and then in January you would get the full complement. And you can use this for the same type of expenses that you would use for the RHCA, the retiree healthcare account. So that whole laundry list that I gave you earlier applies to both the HRA and to the RHCA. One additional option that's available is that within the HRA only, you can, as John and Paul were talking about, the $171 that is part of the Part B premium, that can be set up automatically such that you don't have to submit that expense to Via Benefits. You can, it's even a default that you will get it automatically unless you opt out. You don't have to opt into it. That Via Benefits will automatically, they have an interface with the CMS, Center of Medicare and Medicaid in DC. So they know if you're on Medicare, either you or your spouse. So if you are, and you're paying that $171, you will automatically get reimbursed that $171 without having to do anything. So that's an electronic process that is basically untouched by human hands. You can turn that off if you decide to, but in general, and that's why it is an opt-out type of option, where I would say most people leave it turned on and get that paperwork taken care of automatically instead of having to file a form. The HRA you don't have to worry. It's not like, if you remember the old, when you were employed, there was something called a flexible spending account. And that was a fund, or it was a provision by US law that was use it or lose it, meaning you had a certain deadline at the end of the year to utilize and get the reimbursement for these expenses. This HRA is not that way at all. You can accumulate the dollars over a period of time. You don't have to use the amount that you get every year. It can accumulate, and you can have past year expenses applied also to it. The only rule related to that is you can't apply for reimbursement prior to the year when you turned, or you or your spouse turned 65. So that if you turn 65 in 2023, you can't put 2022 expenses against it. That'll reject by via benefits. One thing that John didn't, or really it wasn't John, it's really between these two accounts, between the RHCA and the HRA, one thing that is different is the RHCA dollars are your dollars. They were put in by you, and they are similar to a 401k in terms of when you pass away. Those dollars will go to your heirs or to any people that you designate on the account. The difference on an HRA is those really are not your dollars. And if you do pass away, those dollars cannot be used by your descendants. They are only going to be used by you, and if you don't use them 100%, they will revert back to the corporation. John, you'll have 1 year, but it is from the date, when you pass away, and then your descendants can then apply for expenses for you if you had any expenses prior to your passing. But after that year period of time, if those dollars have not been utilized, they go back to the corporation. They don't go to your dependents or anyone else. All right, so when you turn 65, or really it could be prior, because of the RHCA dollars are available to you when you retire, which could be between 55 and 65, you need to go and set up an account in via benefits. And you can get access to that in a few ways. There is under Benefit Connect, which is like that HR department for retirees. There is a, let's see where there she goes. So there is a something you can click on within, this is a screen print from Benefit Connect. So you can go through Benefit Connect and click on that, or you can go directly to the Via Benefits website, and it can get a little confusing. It is viabenefitsaccount.com. Via Benefits not only manages or allows, does the management of these RHCA and HRA accounts, but they also are consultants and assisting people to do this signing up for Medicare things similar to everything we've been talking about earlier today. If you just Google Via Benefits, it very possibly will take you to the wrong website. So what you need to do is specifically use viabenefitsaccounts.com, and that will put you in the right place. Chrysler or Stellantis changed the vendor for this as of January 1st, 2022, so about 9 months ago. It used to be a corporation or a company called WageWorks, thank you. And as of January 1st, they just changed it to Via Benefits. So this process has really evolved over the last 12 months or so. So if you don't already have an account, you go in and go to viabenefitsaccounts.com, create a new account under a new user, which is right here at the bottom here, create an account, and then you need to enter your Social Security number. And this is the employee's Social Security number, not the spouse's. It's a little confusing because the Social Security number goes down here at the second section. Don't use this thing. This says employee ID, and we all got, as retirees, we got a CID, Chrysler Identity. And we didn't understand this back 10 months ago when we started this process. We were putting in our CID in here and it wasn't working. So this is a standard screen. Via Benefits is used by lots of different corporations around the country. So this is generic screen, not unique to us. And as I said, it is a little confusing. Don't use this box, only use this box, which is your Social Security number, okay? There's a whole setup process, and if you've used websites over the last few years, it's a pretty standard process. You put in your date of birth and zip code. It then has a whole bunch of verification process. You put your email address. It then sends you an email. You click on the button to go back and forth to make sure that you are actually you. And once you get through, and I think it even, it might send a text to you and you verify on the text. So there's a whole back and forth just to make sure that you actually are the person who is associated with that Social Security number for, fraud purposes. And then you're all set to go. And one of the things that you'll need to do is enter a direct deposit information. Via Benefits has permitted, and so did WageWorks, permitted you to get paper checks, but they are trying to move us away from that so that they really encourage us, and quite frankly, possibly by the end of the year will require us to set up direct deposit information to put your routing number and bank account number into the system so that you can get the reimbursement electronically. Not only is it faster, but it's just probably easier for them so they don't have to worry about paper checks going back and forth through the mail. For us, for those of us who are a little bit computer challenged, there are paper forms as a backup process that you can do. Again, I'd recommend either doing it electronically or getting a child or a young adult to assist you in this, because it is a lot more efficient to get it a lot quicker. Also, there's error checking that happens as you're entering it, so that you don't have to. Put it this way: doing a paper form will take a lot more time, and it is a lot more efficient, and you will get your money quicker if you do it electronically. In terms of additional information, we have talked numerous times about the NCRO website. So you go to ncro.org, and then there is a tab that you can hit that'll get you to the page for Medicare and Social Security. And all this information that not only you're hearing about today, but have accumulated over the last number of years is all out there. So here are some old presentations that we had. Also, Via Benefits, when you turn 65, or as you're turning 65, about a year in advance, if you haven't done this, had this happen already, if you aren't that old, you will get inundated by paperwork, by things in the mail. Everyone wants your business, including Via Benefits. Now, Via Benefits is the approved consultant of Stellantis. So they have access to your information through Stellantis, and you will get 3 or 4 or 5 mailings throughout that year period of time when you're 64, kind of giving you heads up, this is happening, get ready, here's this 800 number to call. These are businesses that are for-profit businesses that obviously would like your money. You're not paying them, but they do get reimbursed from the government, or from the insurance company, I should say. So they are, looking to get your business. So just realize that, these are things that you will get mailings on, along with a lot of other insurance mailings. You can choose them, or you don't have to choose them. You do have to use via benefits to get access to the RHCA and to the HRA. Remember, those are two sides of the same business. So the via benefits trying to get you to sign up for Medicare insurance policies is a different side of via benefits than the RHCA and HRA reimbursement process. That's a captive market. You have to go through via benefits for all the things I said earlier, but in terms of what you actually do for your options, that's your choice. You do not have to use via benefits. And also on our website, we have many, many, many other links, information. So like Paul was talking about Medicare and You from the federal government. There are other piece of information. Some of the videos of these presentations over the years are also there. So there's a wealth of information that we are providing you. Here again are some contact information, and that's also on the agenda. So, calling via benefits or Benefit Connect. This is the information for via benefits. Here's for the Merrill Lynch. And again, if all else fails for any of this information, the insurance committee with NCRO is here to help you. We really prefer if you try to go through all these places first. But if you hit a roadblock, you don't understand something that they've told you, or they are really not being helpful to you, you can call us, and we have the benefit as the insurance company. We can talk directly to people in Auburn Hills. All of the rest of the 5,000 members of NCRO really does not have that option. Your only line of defense is going through Benefit Connect and these other companies. If you have run those trap lines and really are getting frustrated and aren't getting anywhere, you can call us, and we have the ability, either with our expertise, and because we've been doing this for a number of years, but also we have the ability to directly contact, and we meet with the people in Auburn Hills in the HR department on an annual basis and can talk to them through email ourselves. So if you have any problems, just send us an email to that. It's INSCOM, Insurance Committee, inscom@ncro.org. And all the insurance committee, there are about 6 of us on the committee, and we can do problem solving and act as your helpline on this. So, any questions related to this portion of the presentation? So nothing in the room, anything online?
Okay. So do you know if the HRA payments or reimbursements are taxable?
They are not.
Okay, that was the case. Let's see. Getting reimbursed from my RHCA takes 15 days or more. Reimbursements from via benefits take 2 to 3 days. Why is there a difference? And can somebody light a fire under Merrill Lynch?
It's really not a Merrill Lynch issue. It's purely the handshake process between the two organizations. I think via benefits only does the processing to Merrill Lynch on a once-a-week basis. And then there's a flow chart that Via Benefits gave us, and I think it might be on our website, in terms of the step-by-step it takes from going from you filing a claim and then going through their verification that the claim looks legit, and then asking for the reimbursement, and then are the dollars there? It takes a while. It's just the way it is.
Follow the money.
But because the HRA dollars are all contained within Via Benefits bucket, the process of getting your reimbursement is a lot quicker because they don't have to do the back and forth between the two organizations.
I know the answer to this one, but are the increases in the RHCA account taxable as capital gains?
No. Similar to a 401k,
yep.
Everything, all the growth is non-taxable. And so on a 401k, remember that when you withdraw the money, it is taxable. And and you have to do that, you'll get what's called a 1099-R from the Merrill Lynch. Well, if you do any withdrawal yourself while you're alive, it's taxable, and then to your heirs is a whole process, and you go on the IRS website. But for the RHCA, if you're withdrawing money, it's all tax-free. So the growth of it and the reimbursement of it is all tax-free. On your heirs, when that happens, talk to a tax consultant. They will have to talk to a tax consultant in terms of the taxability of that. All right. Any final questions? We'll move on. Okay. So we've given you a whole lot of information over the last few hours. As I said, as we've been saying, it's drinking from a fire hose in terms of learning how all this stuff works and how it operates, because it's very different, obviously, than when you were employed and you only had like 2 or 3 options of health insurance plans that you could get from the corporation. So what the heck do I do now? So you have a few options. Step number 1, you should do what Paul talked about, which is getting that Medicare and You, and this is 2022, but just over the last week, they issued the new version of it. So familiarize yourself with Medicare and You 2023. Learn about the different options, and you've taken the first step by taking this, seminar right here today, so that you can figure out what is the best for you as you move into this new world of Medicare. The choice you make rolling in the first time can limit your flexibility, as Paul talked about, for the rest of your life. So what you do when you're 64 and a half till 65 and a half, basically can lock you in on certain things going until, for the rest of your life. So the decisions you're making now are incredibly important. The old caveat emptor, buyer beware, make sure that you do your homework as much as you can. So 1, educate yourself. So step number 2, you have a decision before the decisions. You can do this all on your own. If you're knowledgeable, if you have the time and you feel that you have the expertise, you can figure this out all by yourself. No problem at all, and many, many, many people do that. But you can go through these consultants if you so choose. So if you do it yourself, you can do it yourself, or you can get expert opinion, expert advice. So you do it yourself, you'll have to decide whether you want to do Medicare and a Medicare supplement or Medicare Advantage. And then you'll need to research the different plans that are out there and decide which one is right for you. And remember, with all of these things, I don't know that Paul even mentioned it, when you were under your employer healthcare plan, you did it for yourself, your spouse, your family. That was basically you made a choice, and you individually, your spouse or your family was covered by the same insurance policy as you chose. On Medicare, you're 2 individuals. Spouse or a retiree can have one set of plans, and your spouse can have the same plans or can have very different plans. One can be traditional Medicare, one can be Medicare Advantage. One can go with AARP, the other with Humana. Purely, you are 2 individual people. You'll be charged 2 individual premiums. You'll have to pay that $170 and $171.50 for you, and then one for your spouse, totally separate. Yeah. So the complexity, even for that, is a lot greater than when you were under an employer plan. Because employer plan, you paid one set of premiums, for hospitalization, medical insurance, drugs. It was all covered under one thing. The diverse decisions you have to make now as an age 65 is a lot greater. So you can go with an expert, and there are a few different places you can go. So one of the things we really haven't talked about is something called MAP, which is the Michigan Medicare Medicaid Assistance Program. This is a federally funded program under, there's an organization in Michigan called Area Agency for the Aging. And these organizations are countrywide, but in Michigan, they're called the Area Agency for the Aging. And under their umbrella is an organization called MAP. And this is a set of consultants who are volunteers like you and me, but they get certified and they can assist you with everything we've just gone through. They can't really help you that much on the Chrysler Stellantis benefits, the HRA and the RHCA, because that's really unique to us. But for all the Medicare issues, Part A, Part B, Medicare Advantage, Part D, Medigap, they are experts on this. The big difference between them and some of these other consultants we'll talk about in a second is they are unpaid. And there is no, so all the other consultants are private entrepreneurs or corporations, and they are getting paid not by you individually, but by the premiums you're paying. The insurance companies are giving them a finder's fee or a service fee for this. The MAP people don't get that at all. So they are, and they can't sell you the insurance. They will advise you, but they will not sell the insurance to you. You'll need to do that on your own based upon the advice and the assistance they give you. So they are not, so the MAP people are not insurance agents, but they are experts on this. So they are available, but we also have, there are many insurance agents who are in the business to assist people as they turn 65 and even, in their 60s, 70s, and 80s to assist them through this complex process. NCRO has identified 3 of them over the years that we have relied on. So let me go back. So the MAP people, we do have a representative in the back of the room. Her name is Loretta Mack. And after this session is over, she will be able to talk to you, if you so choose, to learn about their services and how you can contact them. But we also have in the back of the room one of the agents organizations that we have used for years called Butler Capital Advisors, and representative from their organization, Dave Baum, is here with us today. We also have 2 other organizations or agents that we've worked with, Double Health USA with Dave Key and Laura Camacho, who is a Medicare consultant on her own. They are also there available for your assistance, but they're not in the room today. And then, as I said, Stellantis has contracted with Via Benefits on that side of their business to assist you as an agent. So in our package here, we have a slide for each one. And some of this contact information is also on your on the agenda that was provided to you. So the MAP people are right there. And as I said, it's a nonprofit organization, and there's an 800 number to contact. We also, as I said, have Butler Capital Advisors, and I was just advised that they just updated their process this year, where it used to be that you had to contact them and do things by paper. They've set up an electronic process. You can go on their website and fill in a form through their website, so it's a little bit more high tech. Double Health is also available. This person, I think John said she lives in Austin, Texas. Her name is Laura Camacho. And also Via Benefits, who's the one contracted by Stellantis. So there are contact information from all of them, both their website and their telephone numbers. So that is purely up to you in terms of whether you contact none, one, as the gentleman said, you can contact a few of them. After you individually or they assist you in sort of, winding through this very complicated maze, you then have to actually hit the button. You need to actually enroll in these different insurance policies, either online or in paper. You need to start paying your premium, either sending a check on a regular basis, or you can set up an electronic process through ACH, automated clearinghouse, so that it can be deducted out of your checking account on a monthly basis. It was even asked, or a question was asked earlier, you will receive a Medicare card. Over the last few years, they've changed that a little bit. It used to be your Social Security number on your Medicare card, and that's changed about 3 or 4 years ago, where it's now this very alphanumeric, non-rememberable number for security purposes. So you don't have to, when you walk into a doctor's office, give them your Social Security number. You just give them your Medicare card. Also, by the way, if you are on Medicare Advantage, you really don't, you need to keep your Medicare card in your wallet, but in general, the hospitals and doctors will only ask for your Medicare Advantage card because your claims do not go through CMS, the Center of Medicare and Medicaid. So if you're on traditional Medicare and with a Medicare Advantage, you basically are covered by 2 insurance companies, at least, well, really even 3. You'll have Medicare, Part B, and you're part of you'll get your claims and your EOBs, explanation benefits, through the government website. You'll then get an EOB from your Medicare, Medigap, and then you get another EOB from your Medicare Part D. If you're under Medicare Advantage, all you get is one, I believe, one EOB from your Medicare Advantage insurance company. So Medicare Advantage is much more similar to the process we used to have at Chrysler or Stellantis, where basically you've got one, whether it's, I've got HAP, Humana, whichever insurance company you have, you basically have one contact information or one contact, which is that insurance company. If you're under traditional Medicare, it's kind of split into a lot of chunks. So it gets a little bit paperwork process-wise, keeping track of, a little bit more complicated. So you'll get a Medicare card and you'll get your other insurance cards. You might have to carry 2 or 3 with you. And then there's another 2 or 3 for your spouse. And then on Medicare and various insurance companies, you want to set up a user ID and password, so that way you can get your EOBs electronically as opposed to getting them in the mail, because it's just a lot faster. So good luck with your decisions on this. And we now are open to any questions at all related to this. It's the end of our formal presentation. So if you have any questions in general, we're really not here to answer any specific questions about your particular situation. We want questions that are kind of generic to the entire audience, both in-house here and probably the 50-odd people that we have on the internet. But if there are any questions, please let us know. Sure.
I just wanted to mention, take snacks on your way out. There's a bowl there, and then there's some on the counter. Water, juice, chips, whatever. Thanks.
Very good. Oh. Who says there is no such thing as a free lunch? So, Sherry, do we have a microphone for John? Oh.
Hello.
Oh, go ahead.
This isn't a question as much as a comment. One thing I think you missed, and maybe I was daydreaming, but my wife is younger than I am. So when I went on to Medicare, she was left behind, but Chrysler kept her
Absolutely
insurance, and I don't know that you mentioned that or not. But
no, I didn't specifically mention.
Yeah,
it, exactly.
and so spouses are not always. We're not necessarily always on the, on Social Security or Medicare at the same time.
No, absolutely
So,
not. You're 2 individuals.
And in my case, my wife has a chronic disease, and her medication is just outrageously expensive.
My wife is on medication.
Yeah,
it's $130,000 a year.
Yeah, and so it's its own set of issues. But But I think it's really important to understand that when you break away from Chrysler's insurance, you break away if your spouse is younger, she or he does not.
And it can happen the opposite way.
Right.
That the retiree is younger than the spouse. So you as the retiree might go onto this whole process at 65, but your spouse, or I'm sorry, your spouse can hit it first and you hit it second. So it, depending upon how the ages are different between the retiree and the spouse. Absolutely.
Well, I'm kind of in it to win it personality. And I burned out with WageWorks. I just admit that right now. So what can you tell me specifically will stand, or where I can go to find out what will stand as proof that we have paid medical expenses so that we can claim against old HRA money that's just sitting there in our RHCA account?
So the presentation we gave you here on via benefits, we very intentionally only talked about the enrollment process. There's a whole nother set of slides. We didn't want to confuse you with facts on how to actually do reimbursements. And it's another 10 or 15 slides of the actual process to get the reimbursements. Those slides, A, are on our website, those additional claim processing slides. And also, I believe when you do turn 65, you will get that information from Via Benefits, I think. So our advice is go on to the NCRO website that we've given you, and it's on the agenda here, and go onto our page, and you should be able to find that. It was a very nice, very extensive presentation that Via Benefits gave us December of 2021 and January of 22 as we made this switch. That will go through very extensively how you do the claims processing part. But no, we intentionally left that out because we didn't want to confuse people. I'm not sure whether one of these links is it or not. I'd have to look. But I can even show you later on in terms of exactly the link to go to. Yes, ma'am.
I actually have two questions. One is regarding Social Security. Has anyone in this room taken their annual wages that Social Security tells you you have earned and verified it against their W-2s? Or do you just trust that it's correct?
You can. I mean, absolutely.
Have you done that?
I personally have not done that because, so the question is whether, because you can go on the Social Security website and it shows what your earnings have been every year for the last, 30, 40 years. The question was, have we individually gone and verified those numbers? Number one, you certainly can do that, and hopefully if you're with a large corporation, it's pretty guaranteed that those numbers are accurate. If you're with a smaller entrepreneur or a smaller corporation, and the HR department or the finance department was a small group of people, it's possible those numbers could not be accurate. So you should verify it. Realize also that because there are caps and things like that, that it can get a little, the laws changed over the years. So what your W-2 wages are not necessarily what your Medicare and Social Security wages are. So
I started doing it and found so many discrepancies. I was like, I just wondered, does anyone do that?
Well, and then there are Medicare wages also, which are different. So
okay,
if you want to do that
it.
verification, more power to you. If it's with a large corporation, I would trust that those numbers over the years were accurate. But if you want to verify it, go for it. And you can probably talk to Social Security often. And another thing we didn't say here at all, if you're going on to Social Security, all right, so going on to Medicare, everything we sort of explained helps you in that Medicare process. If you're going to Social Security, I would really advise you to do two things. One, set up an account in Social Security and see what all the Social Security rules are that apply to you. Because for Medicare, we all pay the $170 and things are very standard, but Social Security is all unique to you and to you and to you. Because of your wages that you earned over the years, and also your marital relationships. if you're still married, if you're divorced, if your spouse was deceased, all these different sets of rules. So set up an account in Social Security. They have really upgraded the Social Security website, so it gives you a nice, used to be that you would get a Social Security statement mailed to you. Now everything is electronic. It's really neat. That's number one. And number two, if you've got a very complex marital situation over your years, I'd really advise you to set up an appointment with Social Security and have them with you and your spouse actually sitting there in the room with a consultant or with a Social Security employee and step you through your individual situation.
Thank you. My second question is about EOBs. I get them now, and I'm thinking when I join Medicare, I'm going to get 3 sets. What do you guys do with your EOBs? I mean, what is the purpose of them? I understand the purpose, and I understand what they're telling me, but I don't get why. Do you keep them? What do you do?
Well, the EOB, my wife and I have a very elaborate system. My wife's the bookkeeper in the accounts payable department. I print off the EOBs, and I sit there and I print off a piece of paper and I give them to her, and she puts them in a file, and then waits for the invoice coming from the doctor. And we make sure that the invoice from the doctor saying you owe $37.50 is on the EOB. It says how much you're responsible for paying, because the doctor's office will initially charge you, $500 or $1,000 or something, whatever his list price is, because they haven't gotten the insurance payment. So we sit there and just wait for the doctor's bill to now equal $37.50. We then pay that amount of money, staple the two together, and file it and keep it for 7 years or so or whatever, and then you can have it shredded.
Thank you.
Because also with these EOBs, you get, again, if you're on traditional Medicare, you get a Medicare EOB and you'll get a Medicare Medigap EOB. So again, the doctor's office will get 2 payments, and therefore, based on when they invoice you, they might not have got. We also get some of these EOBs could take a year or 2 sometimes to clear through their systems. It's impossible. Yes.
I'm going back to Social Security. I'm glad you brought that up because I have a Social Security question. Like I said, I'm 66 in I don't know how many months, and I'm not on Social Security yet. I'm waiting. I'm actually waiting to make a decision. I don't, and I'm, that's.
You don't have to go on Medicaid, Social Security until age 70.
Right, I know, but everyone's situation is different, and I'm waiting to decide and trying to figure out when to pull that switch or whatever. But when I went to the Social Security website to get an estimate of my monthly benefit, you mentioned that it goes up some small amount every month.
Well, so there's your retirement age, which I think currently is 66 and 4 months.
4 months, right.
And it keeps changing every year, and it's going towards age 67 as year by year for the next 5 or 6 years. This was a law that was passed back 30 or 40 years ago. After you reach your retirement age, whatever that is, your Social Security will go up, I think, 8% a year.
A year, right.
8% a year, your benefits will increase up until age 70. Once you hit age 70, it caps out.
Right. But that year is broken down by something more than or less than a year.
Yeah, well, it's by
you
month.
Mentioned it's by month.
Correct.
Okay, well, when I went online and did that check, it was only increasing. The increasing amount wasn't every month. It was like every 3 or 4 months. And I'm just wondering if you happen to know if that's an anomaly of the tool or whether, in fact, it goes up every month.
I thought it was going up every month based on it was prorated, so 8% divided by 12.
Right.
Is my guess.
Yeah.
But
well,
I really haven't looked at that level of detail.
Doing it by the
maybe
month,
maybe they just do it by quarter instead of by month. Up an appointment with Social Security.
Yeah, okay.
They have offices in this area, about 5 or 6 offices. One is in Clawson, another is in Pontiac. Set up an appointment and meet with them. It takes you can go in and first come first serve. But the line can be kind of long. I'd really advise going on the website, set an appointment. It usually takes 2 or 3 weeks, but then you actually can see your particular situation. Also, They are so security conscious that if you do not have your spouse there, they will only tell you about your Social Security, not your spouse's. Even though you say, well, it's just my spouse. No, that spouse has to be there at that time in order for them to give you any information about both of you guys. Mm-hmm.
I have a few questions from the web. Sorry. John, you want to go first? Okay.
Guys, we're still in session here, please. Guys, hold on a second.
Sorry, this is just for the folks on the webinar. There might be something of interest to you. If I go on Medicare in November, do I need to inform Benefits Express so that they don't take money out of my pension for insurance?
Oh, good question. That should be, I don't think you need to contact them. I believe that there is coordination between Benefit Connect and the corporation and, well, guaranteed, as soon as you go off insurance, they will cut you off insurance and they will take the deduction out of your, the deduction that they're currently making out of your pension check will stop.
They drop you like a hot potato.
Yep.
Okay, I am in my 70s, live in Florida. Can I use the folks that you mentioned as far as that help to help get with my prescriptions? And the answer is yes.
So the two caveats there are the consultants have to be certified in that particular state. Now, David said that he's registered in all 50 states, but you have to talk to the consultant to see whether they are registered in your state. Also, not all each consultant does not necessarily sell all the products. So you could go on Medicare.gov and see the different products, different insurance policies that are potentially at your disposal, but the consultants that you have, that you can contact with, might not be able to sell you that insurance policy because they have not registered with that insurance company.
So ask the question.
Yep.
I will be 65 in April, and my wife, being younger, will continue FCA insurance in 2023. When I sign up this fall with Benefits Express, should I sign up for family insurance or individual insurance for me and my wife separately? Should I sign up for HDHP/HSA plan or PPO plan, especially because I cannot contribute to the HSA after April?
So there are some very specific rules when this happens, depending upon who hits 65 first. What I advise you to do is when the open enrollment period occurs with FCA, contact Benefits Express and they will be able to tell you exactly what situation exists for you particular. Because there's one set of rules if the retiree hits 65 first, and there's another set of rules if the spouse hits 65 first.
And we're sorry to the folks on the webinar that we couldn't send them snacks. I don't know what you guys are thinking. You should email a box to everybody.
A goodie box, okay.
A goodie box. My wife will go on Medicare before me. Does my Chrysler healthcare premium automatically change to single person rate at the month she is 65?
Yes, I would advise you if one of you is going to be turning 65 in the next year, I would advise you to, when you do your annual enrollment, let's say you're both 60 or 162 and 164, and you're signing up for insurance this fall, talk to Benefit Connect and say, okay, I'm going to be turning 65 in September of 2023. How does that affect my pension check in August, September, October of 2023? So they should be able to tell you ahead of time. I mean, yes, you can actually figure that out once you hit 65, but much better when you're enrolling this year to sort of know ahead of time how that's all going to be working out. But it should work, but that way you get a little bit of a guarantee of what will happen, 9 months or 12 months later. And is that it? That's it from the web? All right, John?
Yeah, I'm going to take less than a minute because Howard triggered a thought. Some time ago, I had a friend pass away, and the wife went crazy trying to sort everything out. And I wrote for the website Survivor Guide. Write that down, Survivor Guide. Because in doing that guide, I had to explain everything. If the wife dies first, or excuse me, the spouse dies first, retiree dies first, when you both die, what happens, what you have to do. So look at that Survivor Guide. It was mailed to everybody.
So it's not just so the survivor guide, but also it is incredibly important for all these things to set up beneficiaries, so that when we all pass, that you're not only survivor guide is for your beneficiaries ahead of time, but once you pass, those beneficiaries, whoever they are that you told your pension or your 401k or your RHCA, that can't be changed. That's it. So another thing that NCRO offers is a class we just had it about a month ago for estate planning. Incredibly important as we all age. So make sure you have an estate plan and make sure that your beneficiaries are set up appropriately such that whatever happens after you pass are exactly to your wishings. Thank you so much, everyone, for coming. And any additional questions, you can stick around afterwards or else send us an email at inscom@ncro.org. Thank you so much for your time.